Amish Munshi, investment advisor, is now joining us this afternoon. Amish, good afternoon.
Afternoon.
Railway budget is behind. Eco survey is behind. You think volumes would be thinned today till we have the entire budget tomorrow?
Sure. I think all said and done.
On Monday.
Yeah. So sure. I think all said and done. I think it's still an economically important document which the markets would like to look at it. I think the kind of realistic positions which you have seen both in railway budget as well as economic survey, I think market is also expecting a similar in terms of the union budget on Monday.
Right. Do you see that as a big event? If there is any disappointment over there, markets are so weak that it can crack quite significantly?
Our sense is that if you see over last 10-15 years as the markets matured, rightly so, you're seeing the impact of the union budget is decreasing. So it could be a 1 or 2 day affair, some disappointment, some celebrations in certain sectors, but it would be probably 1 or 2 days affair kind of thing. And I think if you see, particularly after the 14th Finance Commission recommendation last year, which the government has accepted, I think more and more important over the next 3 to 5 years will be going to be the state budgets as compared to the union budget. And I think those are the budgets which probably over next 3 to 5 years market will start looking at in much more details than what we are looking at this point of time.
Right. What is the sense that you get at the market? Say if the budget was a disappointment and disappointment is expected, say if market Nifty was to fall 100 rupees, 50 of it is already done?
No, I think so. I think if you see the entire 2016, what has happened to our markets is absolutely led by global factors. The good part is that anyway market is getting into the budget with very low expectations. They know in terms of fiscal consolidation there is a tight rope, there is a slowdown in the economy, global challenges, volatility, headwinds are definitely there. And domestically, we have our rural consumption challenge because of 2 back-to-back poor monsoons. So I think all the negatives are well discounted by the market, will continue to be colored more by the global events, global markets as compared to probably the budget.
Right. So, you mentioned about the rural slowdown. In the budget, you expect some SOPs to come in for rural area or boost spending over there?
I think so, because we've seen that while the urban consumption has held up quite well, the benign inflation environment has definitely put some confidence back into the hands of the urban consumer. Basically, I think the lower MSP price, 2 back-to-back poor monsoons, and more importantly, no land deals happening. I think a combination of all these 3-4 factors have clearly put a brake on in terms of rural consumption. Even today, almost 60% of India stays in rural part of the country. So I think it's quite important, and we believe there will be certain specific targeted, steps which will be taken to revive the entire rural economy and consumption. And mind you, between now and next year, there are almost 8 to 9 state elections. So one needs to keep that also in mind.
Right. So how should one play this rural story? So something like a M&M Finance or a finance company which has focus over there, or largely played via the FMCG play? How would you like to play the rural story?
I think the first pickup would very clearly be demonstrated in FMCG companies. That the A2 the entire sachet revolution has happened in India over the last 10-15 years. So we see that if there are some specific steps to revive the rural demand, it will be in the first place where you have seen that there is an aspirational level which is high, the penetration is low, and I think FMCG fits in quite well there.
Right. As far as playing it via something like a M&M Finance or some NBFC which has a good focus over there, should that also be into consideration?
No, I think within financials we are quite comfortable only with private sector banks and the mortgages, so housing loan finance companies, because we feel that there could be some additional SOPs, particularly because of government focus on affordable housing and housing for all. So I think combination of these two.
We've heard about this housing for all and SOPs coming in, but it generally doesn't have an impact on these companies. You otherwise also like this, whether there are SOPs or no SOPs in the budget?
Absolutely. So I think the kind of potential this sector has at this point of time is quite huge, and we feel that long-term investors should definitely have some portion in their portfolio.
Right. As far as PSU banks are concerned, recapitalization over there, would that significantly change your outlook if there is a meaningful change from what the street is expecting, or it really doesn't matter?
No, I don't think so, because I think the challenges will continue to remain. Recapitalization is just a number. So, you provided this year 25,000 crores, next year could be anything as expected, 35,000 crores kind of a thing. But the real challenge is in terms of NPAs, in terms of getting professional managements on board, the entire bankruptcy bill. I think all those challenges continue to remain. And with global economic challenges, you've seen a lot of commodity companies and companies which are exposed to the global economy are under stress. And that's why we feel that it's safer to, be with private sector banks as compared to public sector banks.
Right. As far as some of the other, measures are concerned, talks of selling more to ARC, bankruptcy code, apart from only the money that they give, those would also be in focus?
Yeah, so I think that will all be work in progress, and probably it will take almost a year and a half, 2 years to, fructify kind of a thing. So I think recapitalization probably is the first step. Secondly, probably we expect that from 1st of April, the entire Banking Bureau Board will get into action. You will have professionals coming in. So those will be incremental changes which will happen in the entire pack. But while the public sector banks continue to look attractive optimally in terms of price to book and dividend yield, but we feel that, even when the economic revives, one is they'll have constraint definitely in terms of their capital adequacy. And secondly, we continue to believe that the new technology private sector banks will continue to gain market share like they've clearly demonstrated over the last 20 years.
Right. A lot of talk about oil cess being reduced, where names like ONGC, Oil India have been paying a flat ad valorem duty. Do you see that changing down to a percentage which could benefit these companies, or it's largely factored in?
We believe that there is a case in point. If you see today's fixed cess of 4,500 rupees per metric ton, which was levied when the oil prices were more than $100. Today we have come down to 30-35 USD per barrel. So there is a case to change from the fixed cess to an ad valorem duty, and then link your revenues to the prices. And if that happens, definitely it will be positive for the upstream companies.
Right. As far as any custom duty on oil is concerned, would that be considered negative for oil marketing companies?
There would be any which ways. I think within the oil and gas spectrum, we continue to remain bullish on upstreams as compared to downstream. That call has not really played out over the last 3 to 6 months. So let me first admit that. But we feel that at current oil prices of $30-35, we see an upside at least to $45-50 over the next 6 to 9 months. In terms of the run-up and valuations of the OMCs, we feel that valuations are not so attractive, probably what they were 1.5 to 2 years back. And most of the reforms in terms of pricing, free pricing of petrol followed by diesel has happened. Probably there will be another leg, which is the DBT for kerosene.
Right.
Excuse me, but we feel more comfortable with upstream.
Right. Do you want a glass of water? I think you just... Okay. Generally, apart from the rail budget, if we look at infrastructure, what essentially is, what essentially would be your call? Because, capex was good, but execution was not that great. Can a similar thing be expected in the union budget as well for infra and capex? Because railways, roads were driving this particular space.
Sure. I think the acceleration will happen. One is that if there is a clear roadmap and focus in terms of just finishing the projects which are stalled at this point of time. So projects which are 60-70% completed. If government just focuses to complete those projects, I think that itself is good enough to start the ball rolling. And those companies will start at least having cash flows. I'm not even talking about profitability, and that actually helps the public sector banks also. So I think the first focus should be just to complete the stalled projects which are there lingering for last 2, 3, 4 years kind of a thing, and that would really be helpful as far as the infrastructure sector goes.
Right. How would you look at ITC going into the budget? Tobacco always is in focus. The name has underperformed. You think again, one has to just wait and watch, and if there is further duty, then it's just an avoid despite the attractive price?
No, so what we see is that if you look at globally, all seen businesses are good investments, because they have disproportionately high return on capital employed, ROEs and stuff like that. And we've seen that particularly in backdrop of, last 2 to 3 years of consecutive rate hikes which has happened towards the tobacco industry, we see that there could be probably a blended hike of 8 to 10%. You've already seen.
Which should be fine, right?
Which should be
7-8% is something which is quite
Yeah.
absorbable, or it's fine, I mean, at least the
Yeah.
volumes would not take a big hit.
Big, yeah, and at some point of time, one needs to be really careful, because there could be an inflection point where you see that the entire business, a lot of it then moves to unorganized sector, where actually instead of hiking the duties, you are not able to actually collect the revenues. So I think it's a very trade-off which the government has to do.
Right. So, say if it's 15% is something which we've seen last 4 budgets, consecutively, which has been a problem. Even last budget, the arguments were same, that last 3 budgets we've seen that, hike duty has been hiked, volumes have declined. So, say if there is another 15-16% hike, which is quite a bit of possibility coming in. Do you think it would largely suggest that the government is not worried about the revenues that are coming from tobacco, and it's probably about the business and the consumption of tobacco that they want to stop, which means that ITC could derate further?
No, there is a possibility that if you have another severe rate hike for this particular industry, then definitely that will impact the valuations and the multiples. But one also needs to keep in mind that it's part of your strategic holding. So there is a little bit of trade-off there also.
Right. Apart from this oil, PSU recap and ITC, what else would you expect to come in the budget? Do you expect any SOPs to come in for the power space, a lot of stalled projects, a little bit of mention about renewable energy from the infra side? Are there any expectations?
No, I think definitely, the kind of action which has happened on the power side, we are quite positive. The entire Uday scheme, we believe that Section 80I benefits will continue, and there could be an extension because they are expiring in 2017. Government can really, extend it to at least 2020. That would be really helpful. There could be a little bit of hike in terms of green cess on coal, so one needs to be a little careful about that. But I think the real key will be Uday, because if this budget is able to, clarify this 75-25 breakup, and more importantly, a very clear indication that these bonds will be eligible for SLR, I think that would be really helpful.
Right. What's your view as far as Just Dial is concerned? Now, the stock has taken a knock. They've launched an app yesterday. And, people are saying that, late, but the app seems to be good. Do you think if the app works out, maybe in, say, next 1 month or 2 months, whenever we get the data, there is a case for re-rating, or, there would still always be a risk with these e-commerce companies, the way, their apps can get old?
No, I think definitely we feel we clearly avoid this new technology e-commerce type of. One is that definitely one needs to be a little more careful in terms of actual cash flows. Secondly, valuations. And third is that, the kind of moats this business have is not so great because the technology can change overnight. The field is entirely open to any new challenger coming in and quickly, taking away the market share. And that's why the valuations also don't justify. So we, try to stay away from such kind of businesses.
Right. Just, talking about the budget and the startups, you expect some benefits to come in for startups and Make in India, because there has been a lot of, say about them. It may not be in the listed space, but just generally on the manufacturing and service side.
Yeah, I think some clarity, for example, in terms of, non-applicability of MAT, or secondly, because when there is a change of ownership, more than 51% in 1 year, and you are not allowed to carry forward losses, I think if the budget clarifies that and it allows actually, irrespective of the ownership change within a year, I think that will really help to push our case further in terms of giving importance to startups and that part of the economy to blossom.
Right. Just a word on the IT sector and the pharma space, Amish. What do you essentially think with currency being at 70? Markets are completely ignoring the benefits for these exporters?
No, we feel that anyway both these sectors, one should not look at the businesses or stocks or investment thesis should not be based on currency, because that will continue to remain volatile, and the businesses should not have currency as their main advantage, but ultimately what value addition they do to the ultimate customers, and that's the valuation which they should command. So I think while it's a good tailwind to have, we continue to like IT services and they continue to have market share gain year after year. And I think pharmaceuticals, more particularly after the recent correction, even some of the leading names have started looking quite attractive. And probably the government also, one of the expectations is that this 200% weighted average deduction on R&D it moves up to 250%. And there are certain items in terms of, the fresh new clinical trials, certain which are not covered under this allowability of 200% reduction. So if the definition is expanded, definitely that will also be beneficial to pharma. But definitely currency would not be a factor to decide in terms of long-term investment.
Right. Amish, thank you so much for taking out time for us. Always a pleasure.